Good afternoon and welcome to the AICPA Town Hall series. I'm Eric Auskerson, one of your hosts for today. We greatly appreciate being with you weekly, and we've got a fantastic program for you today. So first, let me just quickly cover some housekeeping items. You can earn CPE. You will receive a number of pop-ups throughout the event. Just click on 75% of those pop-ups. And at the end of the event, you can receive your CPE certificate by clicking that blue button on the bottom toolbar. And don't worry if you don't receive it at the end of the webinar. You will receive an email where you can get it at a later time. I also want to highlight that this bottom toolbar allows you to download the materials for today's event, to ask questions, and also you can resize these windows. So here are the presenters for today. You've got the usual AICPA team, myself, Eric Auskerson, Sue, Carrie, and Mark Peterson. Carrie's actually stepping in for Lisa Simpson. And we've got a very special guest, Senator Young, who I'm going to introduce in a moment. But before I bring Senator Young in, I just want to cover two slides that we've been leveraging on a weekly basis to really provide some context for Senator Young's opening remarks. This is a slide that we've been leveraging for the past 5 months. It highlights the journey that we've all been on. Back in March and April, we first were focused on what legislation would pass to support the businesses that have been impacted by the pandemic. The 44,000 firms they mobilized, they played a critical role in that PPP application process and have been working as a trusted advisor for their clients. And in many ways, this has been such a defining moment for the CPA profession, along with the other stakeholders, the policymakers in DC that put this legislation forth, the Treasury and SBA that helped execute it, the bankers, the payroll companies, that also helped do a lot of the implementation. So there have been many stakeholders, but the profession clearly has played a huge role. In many ways, right now is similar to that early April timeframe, because there's a lot of discussion about more business relief. The firms are trying to get their arms around that, trying to help advise their business clients, their small business clients in particular, how to continue to navigate during these very, very uncertain times. We've also been talking on a weekly basis about the many different relief options. Senator Young is going to take a wide lens perspective in his opening remarks and talk about how he's thinking about this next phase of business relief. We all know it's been about the PPP program, but it's also about EIDL, the employee retention credit, the payroll tax deferment. Recently, we've got the presidential memorandum related to the delaying of payroll taxes, and it's about the future business relief bills that are being discussed by our elected officials. So we've got lots of questions for Senator Young. So let me introduce him and get to these questions. We're leveraging many of the questions that we've received from you on a weekly basis. Senator Young's bio is in the materials, but just a couple of comments. He's a Naval Academy grad, served in the Marines, was a member of the House before coming into the Senate. He's from Indiana, and he's been very, very active in the small business relief programs. He's a member of the Senate Finance Committee and Small Business Committee. So welcome, Senator Young. And to kick this off, the first question I have for you is, as you look back on these past 5 months, reflect a little bit about how you've seen things go, and what lessons have we learned about these relief packages? What's gone really well, and how are you looking forward to this next phase? And then I'm going to get into many questions about your Restart Act and the Skinny Heels Act, but kick us off with just some broad perspective on this overall environment and all that has occurred. And thank you once again for being with us today.
Well, thanks so much for having me, Eric. And I want to thank AICPA and all the trusted advisors who've tuned into this. Your question is, I could go many directions with it, but for starters, we've learned that Congress, which was an institution designed to be inefficient with a series of checks and balances, actually can be efficient during a time of national emergency like the one that we're currently undergoing. So I'm proud that we were able to, in fairly short order, in a bipartisan fashion, respond to the needs of the American people and put together the CARES Act, which of course included the Paycheck Protection Program, EIDL, and so many of the other programs that were on your slides, Eric. So that's, of course, been one of the lessons learned. The other lesson learned is that there's a trade-off. There's a trade-off on one hand between speed and on the other hand between clarity. So if we're going to move very quickly, there's probably going to be a certain opacity to our work product, and that clarity will have to be brought through later guidance to help ensure that financial institutions, financial advisors, and other trusted advisors have the level of clarity required in order to navigate the system, to say nothing of the clients who you serve, right? So we've certainly learned that. I think we've grown more appreciative of the ecosystem collectively, members of Congress and others, of the ecosystem of experts out there who are interdependent. We depend in this specialized economy on so many individuals to make our businesses that actually touch retail level customers or wholesale level customers. There's a whole ecosystem of support that has to function in this modern economy in order for those things to work. CPAs play an important role there. And as a matter of legislating, I personally learned how valuable your feedback is. Around the state of Indiana, I benefited from the Council of CPAs and business owners, workers, and so many other stakeholders as we work very hard to improve these programs, to help people navigate these programs and ensure that in successive rounds of assistance that we've provided, those rounds of assistance have been informed by the counsel you've given to us. So, you know, we've learned a number of things in the midst of this, and hopefully the latest iteration of lessons learned, perhaps some of the lessons I'll learn over the course of the next 45 minutes will lead to a better work product.
Well, let's talk about the firms are thinking a lot about this next phase of business relief, and the Restart Act, which you put forth with Senator Bennett, and has got wide bipartisan support. I think there's 53 co-sponsors. Lots of business CEOs think it's a very strategic proposal. Could you just share with this group how you thought about the Restart Act and what were the key drivers? And then after this, I want to talk a little bit about the HEALS Act and how all of these things are moving forward and how you see things evolving. But let's start and just give the firms on today's webinar a brief overview about the Restart Act and why you and Senator Bennett put that forward.
Thank you, Eric. So the Restart Act, in short, is a successor program to the Paycheck Protection Program. It was our fervent hope as a country and as a Congress that short-term assistance, 8 weeks, later expanded by a few weeks of assistance, would be sufficient to help out so many of our small and mid-sized businesses and get through this pandemic. But it's become a lot clearer that this virus is going to be around for a while, and some additional assistance will be needed. So that's why this longer-term program of the Restart Act was something that Senator Bennett of Colorado and I authored. The idea here is to provide a long-term working capital loan. By long-term, I say in comparison to the Paycheck Protection Program. So 6 months of working capital assistance to our smaller enterprises to pay for things like payroll and fixed operating costs, rent, mortgage expenditures, utilities, etc. This proposal, learning from our previous lessons and based on the counsel that so many on this webinar have provided to me and my colleagues, provides much greater flexibility than the Paycheck Protection Program, and that it's a lot more targeted to provide relief to those businesses who've been hardest hit. In fact, eligibility requirements would establish a threshold of, if you've taken a revenue hit of at least 25%, then you'd be eligible to receive assistance through the Restart proposal. You receive a loan capped at 45% of your 2019 revenue, or $12 million. Again, 6 months of funding to open your doors, and forgiveness would be allocated for certain expenses, such as payroll. The loan features no principal payments for 2 years, no interest payments for year one, be very forgivable loan terms because this is backed by the federal government. And the last thing I would add is that the loans would be offered through your local financial institutions or through your online fintech platforms. So we use the existing network of Paycheck Protection Program loan facilities, as opposed to, say, the Main Street program, which has been, to put it pointedly, very difficult for so many Americans to navigate. So the uptake rate has been incredibly low. Those monies could, in fact, be repurposed towards this Paycheck Protection Program. We think an allocation of $300 to $350 billion would lead to loan value of over $1 trillion if indeed we were to make that transfer of funds from the Main Street program into this new Restart program. So that in short is the outline of the Restart program. Myself, Senator Bennett, the 55 co-sponsors in the United States Senate on a bipartisan basis, the roughly 150 in the House of Representatives, and the 50 or so national groups like the National Association of Manufacturers and others, I think are all open to some measure of compromise in terms of what thresholds we've established for revenue and other things. But the basic concept of a long-term working capital loan where eligibility is based on revenue loss and forgiveness is based on the amount of revenue loss has already been socialized and broadly adopted throughout the Congress.
Well, Senator, I mean, there does seem to be so much bipartisan support, and when you look at what the PPP program did, the market show it. A lot of small businesses have stated the important role it played. So it does feel that there's a lot of momentum to get this next phase of business relief done. With that said, there's also a lot of gridlock. Clearly, we're moving into a big election. So how do you see things playing out? I mean, this is the a little bit of the crystal ball question, but over the next 30 days, is this a question of when, not if? One thing we're telling our firms, you need to get ready for the next phase of business relief. It could happen over the next 30 or 40 days. If it doesn't happen then, we think it's absolutely going to happen after the election. But maybe just talk a little bit about, since there is so much bipartisan support, what's going on with the HEALS Act, the Skinny HEALS Act, the Restart Act, and the other discussions in the Capitol around business relief?
I'll start in the other chamber. The House of Representatives put together their package. I think it's the HEROES Act. We have the HEALS Act, which you're referring to in the United States Senate. The HEROES Act has a price tag of $3.5 trillion. The HEALS Act is $1 trillion. Speaker Pelosi and members of House leadership have indicated that they're prepared to move towards a package of $2 trillion. Mm-hmm. Most of that sort of scaling back is a timing issue. So programmatically, there haven't been a lot of adjustments in terms of their negotiating posture, but they would maintain the same line items, be funded in their counter proposal, which would expire right prior to the election, if I recall. So that puts us in a tense negotiating posture at this point. But there is ongoing dialogue between the House and the Senate. In the meanwhile, as you know from watching television and listening to things on the radio and reading in the newspapers, there's been a lot of attention on reforming the Postal Service. So there'll be a vote on that topic in the House of Representatives as a very skinny bill. And in early September, we in the Senate intend to vote on a skinnier version of our HEALS Act, which will be more comprehensive than postal reform. So among the things we intend to include in that will be liability protections for our businesses. And I could get more into what those might look like, but for our businesses and for our schools and teachers and administrators, it will be an extension of our federal unemployment insurance in some form legislatively. Another round of paycheck protection, maybe that's the Restart Act or some other variant of the Restart Act for our smallest businesses. Federal aid for education, federal assistance so that we can have a robust testing regime available and accessible to boots on the ground Americans. More money for vaccine development pursuant to this Operation Warp Speed, which has been, again, occurring on a bipartisan basis for a while. More funding for the U.S. Postal Service and funding for our government, so-called continuing resolution, through the middle of December. So it'll take us past the election. So as you hear me itemize those many provisions, you'll think, gosh, there ought to be a lot of things in there around which there is bipartisan agreement. And you'd be exactly right. There are a lot of things. But there's still some hang-ups. One of the hang-ups, just to be direct, pertains to pandemic unemployment insurance and the level of generosity we provide on top of state level unemployment insurance. To generalize, the Democratic position or the Democratic majority position in the House is to maintain that $600 plus up on top of the state level insurance for a seemingly indefinite time period. And then another significant hang up pertains to the amount of generosity we provide to our states. Our perspective is often shaped by where we're sitting, and I'm sitting in the state of Indiana, where over a number of years we've built up a trust fund, a rainy day fund, and we were prepared for this rainiest of days, and that will be spent down. And so somebody like myself is apprehensive about bailing out, to use the popular term, a state that has not been as fiscally cautious as the state of Indiana, especially for pre-pandemic decisions made or unkeepable promises made, say to public pensioners, when those promises certainly can never be kept. So these are some of the debates we're having. They're very hard conversations. My hope would be that among all the things I mentioned, there could be bipartisan agreement followed by bipartisan action, as opposed to having to get everything you want during this time of national emergency.
Yeah, so that's an impressive list there, Senator. And one thing I want to thank you for is just the opportunity that we've had to provide your staff and you feedback on a lot of this draft legislation. And we are a supporter of the Restart Act, and we were a supporter of of the CARES Act and provided a lot of input, not just on the bill, but post-bill on the execution, trying to drive a common approach and interpretation to how this should be executed. And we work closely with Treasury and SBA, and we've had some SBA officials on these town halls. So if something doesn't happen, would you put it as highly likely? I mean, it sounds like it would be unfortunate. I mean, there's bipartisan support, but will there be a successful bipartisan action to get some legislation passed is the question. And if that doesn't happen, due to all the complications you mentioned, post-election, do you think this is something that then would happen rather quickly once that the political climate of the elections have passed us?
Well, I promise you I will answer both questions, but I just really want to emphasize personally, and I know I speak for a lot of my colleagues, especially the Republicans with whom I have more conversations, but I have positive professional relationships with senators on both sides of the aisle. We really need to act now. I feel a sense of urgency. I know you're hearing it from your clients, maybe family members and neighbors. So, I just got a text message from, and I don't need to get, personal. This isn't Dr. Phil here, but I just got a text message from a friend I've known since junior high school, and really, he's got a family now, and he describes himself as a Tea Party, very limited government conservative, and he said, and he was very frustrated with Congress, so we're not willing to act right now to provide assistance. And he understands, like the vast majority of Americans understand, that in times of national emergency,
right,
your government needs to act. We need to respond to people's needs. So I really do hope that we can come to terms before the election, and I believe we will. I believe we will. I think it will take a number of weeks to probably get there, though. But in the absence of that common agreement, which we all hope for prior to the election, then I think it's almost a certitude that we will act boldly, and we'll be responsive to the needs of the American people post-election. In the meantime, there's an opportunity cost occurring. I just can't underscore this enough. Since from late March until mid-July, I just heard this statistic the other day, there were 80,000 small businesses around the country. These are since 1977, all net new job creation in this country has been from our small and young firms. There were 80,000 of these engines of our free enterprise system that permanently closed. So the longer we wait, the more fiscally irresponsible this is, because people go into public assistance and these tax-paying entities, businesses, are no longer viable. And so let's just hope we act soon.
And our 44,000 firms and our many members in business and industry couldn't agree with you more. I mean, we've been working tirelessly over the past 5 months on getting the business relief to these 5 million plus businesses so they stay intact and keep functioning. We're working really hard on the PPP forgiveness process to get that anxiety behind them. These businesses want to know that loan is going to be forgiven. And then, as you said, there is so much need for additional business relief. Well, let's just kind of hit a couple of other topics that this audience is paying a lot of attention to. One is the recent presidential memorandum on delaying of the payroll taxes. There's a lot of questions related to this, related to how it would be implemented. It's in a holding pattern right now due to all of these questions. How do you see this?
So the president's executive order calling for a deferral of payroll taxes payments starting on September 1st clearly comes with some technical issues pertaining to implementation. I know there's a great deal of clarity that needs to be brought to this, and we'll continue to wait for further guidance from Treasury and from SBA. They are well aware of the desire for more clarity, because you and others have done a good job in bringing this to their attention. Certainly our office has been vocal on this. My own hope is that we can get workers as much assistance as possible, and we'll look for further guidance from the administration. But I hope we can act legislatively when it comes to matters like this. I do not think that this is an optimal way to make public policy through executive orders. With that said, there may be a beneficial sort of a byproduct of this action, which is to focus the minds of the legislative negotiators to actually end up with a work product. So I'm sympathetic with the administration wanting to act in response to the emergency needs of the American people in the absence of legislative action.
Well, that's excellent. I think we would welcome this driving that legislative action of the restart version of the HEROES bill, the Skinny bill, the Skinny Heels Act, just to get something in place. So that makes a lot of sense. Here's another somewhat technical item related to the PPP program. It's around the PPP expense deductibility, and that expense being deductible even if the loan is forgiven. And we feel like that's the intent of the act, and currently that is not the position of the IRS guidance. We know there's a lot of bipartisan support to make this deductible. How do you see, and this is something that is not currently in some of the bills, and it is a matter that clarity is needed for with these small businesses, because they want to know what their tax burden will be coming up in the 2021, or if they've got a fiscal year that's even ending in 2020.
So this is one of the reasons we have separate branches of government, which can be inefficient at times, right? But it's important that the administration reflect the will of the American people as manifested through the legislative process, right? And in this instance, back in April, the IRS released an official notice guidance which contradicted the black letter law declaring that no tax deduction be allowed for an expense that's otherwise deductible if the payment of the expense results in forgiveness of a PPP covered loan. So to address this, Senators Cornyn and Grassley got their staffs to work together and have introduced a piece of legislation, the Small Business Expense Protection Act, to clarify congressional intent. This was included in the HEALS Act, again, the Senate proposal that has already been produced in our chamber and is currently part of those phase 4 negotiations that are ongoing.
So that's to be determined, and we're hopeful that will be resolved. One thing that we're doing with our firms on many of these matters is having them just tell their clients be patient. The policymakers have worked extremely fast. I mean, the amount of funding that went out in PPP in such a short time clearly is a historical achievement. So even with this one, we're saying, be patient, and this hopefully will be resolved in the right direction. I think both you and I are in our offices today, but there's a lot of people that are working remote. I work remote a lot, like many, and you've been thinking about this, and there's costs with remote work, and I know you've put forth this potential tax credit for remote work expense. This has got a lot of interest with our firms. So I'd like you just to kind of share with us your thinking around that.
So the acronym, and every good piece of legislation, as we know, starts with a good acronym. Right. In this case, it's the At Home Act. I won't spell it all out, but in short, Senator Hassan, who authored this legislation with me, and I wanted to ensure that businesses and individuals across the country have the ability to continue to adopt these remote work postures to navigate the virus and perhaps to come up with a more efficient way to work after the virus as well. But in the near term, we want to help businesses with these unforeseen expenses through this legislation, which would establish a tax credit for businesses who invested in equipment and network services. And then at the individual level, we also provided some assistance. So it would be an above the line deduction for individuals who are trying to adjust to this current environment. The remote work tax credit would help businesses and individuals by allowing a 25% credit on qualifying expenses at $2,000 per employee. Again, 25% credit on qualifying expenses, $2,000 per employee, and $50,000 per eligible entity for businesses up to 100 employees. We know your larger enterprises may be able to handle these adjustments, but this is more targeted towards those for whom these sorts of adjustments are particularly challenging. And then it would phase out to 150 employees. And then,
I'm sorry, go ahead.
Well, that's all right. And then the individual $150 above the line deduction would apply towards those individuals who personally invested their resources in qualifying technology.
Well, we'll be watching this. We think it makes a lot of sense. We put a lot of emphasis into, cloud solutions, these new capabilities that have been put in place for businesses, for firms, and obviously for workers. And you need to invest now. You need to invest now where it's almost, you've got the PC revolution, the .com, and now we're in this pandemic environment, which also is creating a lot of innovation, and you need to invest to this changing work structure.
I just add, Eric, that teachers love this because they can also use this, these additional allocations, $150 above the line deduction on top of the existing law deduction. I think it's $250. It's already in current law. So our teachers, who we all appreciate in the midst of this pandemic, really like this.
They absolutely deserve it. So we'll be tracking that. We've got a lot of tax professionals on the call with us today. Let's just talk a little bit about local. I mean, it is the pandemic and what's it doing to different regions of the country varies. The different regions of the countries have different business environments. Welcome hearing a little bit more about what's going on in Indiana and what you're hearing from your small business community. And we've got a lot of, I know we've got the Indiana Society and a lot of Indiana firms out there on this call today. So hello to all of them.
Well, I think you asked me about here in Indiana and the small business atmosphere and the broader business atmosphere. Look, I mean, this has been a tough time for a state that's the most manufacturing intensive state in the country. So we'll begin there because manufacturing so frequently requires the close interaction of individuals to produce products. So there's been a major investment in personal protection equipment and in a reworking of operations in order to accommodate the assembly of machines. I was just up in Lafayette, Indiana, the other day, where automobile assembly is still occurring, but under far different conditions than pre-pandemic. It is inspiring how people have improvised and adapted and overcome to continue business as almost usual in the midst of this. But we have a fairly diverse mix of businesses. Like in most parts of the country, our hardest hit businesses has been the retail sector, right? That's not a really pretty picture, but even there, people are changing business models. I know that CPAs often play the role of helping with that, right?
Absolutely.
Whether it's supply chain adjustment or reviewing new business models, and they've certainly been adjusting. And then, of course, there are some businesses that have completely pivoted and found new lines of business, new business models. Some entrepreneurs who found entirely different opportunities coming out of this. I just visited a company that makes large trusses yesterday. In fact, they're the largest truss manufacturer. Those things in concerts that are above the singers, that hang lights on them and other things. And they're now making floating bridges. They're making gameways for piers, and creating new lines of business. So those who are able to survive this period of time will, of course, have an opportunity to be very strong in the back end. But in Indiana, as elsewhere, I think we have an obligation to help out those Main Street businesses, which, because of the nature of their business, just may not have an opportunity to make it at all, and at least give them, a 6-month runway, which the Restart Act would do, to allow them to rethink their business models, rework, some things so that they can remain viable, or adjust for a different future.
Well said, Senator Young. We couldn't agree more that there's going to be so much entrepreneurialism here in America. It's what makes America great. But we do need to give people time, give these businesses time to stabilize, and then to rethink their business model, like you just mentioned with that Trussell company. So we're seeing that in the firms. Yes, the firms are playing the business relief role, but helping them with adjusting on the business model. So to kind of wrap up here, this has been fantastic. Every week we talk about what's happening in DC, and it's just excellent to have you here at such a dynamic time in sharing your insights. So this has been extremely valuable. Right, as you think about the firms and the trusted advisor role they play, what closing advice do you have for them on? Because you're advising your constituency, you're listening to them. They listen to their clients, and then they need to advise them. What advice do you have for the firms as they talk to their business clients, and their business clients say, "Help me out. What's going to happen over the next couple of months?" What advice do you have for the firms, and also what do you request of us to do to help play our role to continue to support the U.S. economy?
Well, far be it from me to give business advice, but just some observations and maybe reflections, right? Mm-hmm. So CPAs interact with every size and form of business we have in this country, and so you're literally on the front lines of every economic sector, and every form of service delivery, every business challenge that's being experienced out there, if not because of challenges that you and your firm are facing, then challenges your clients are facing. So to the extent you believe that something is going unaddressed but needs to be addressed, as a matter of public policy, I can think of no sort of group of individuals that is better situated to raise the red flag or pick up the phone or shoot off an email to somebody like myself and say, "Look, Senator Young, we think there's a real opportunity to make a positive difference, save a lot of jobs, save the taxpayer a lot of money in the longer term by keeping these businesses viable. Here's the problem definition. If you happen to have a solution in mind, great. But if not, don't hesitate to just make us aware of some challenges that are out there." These are the things that make myself and my colleagues far better at what we do. This is why we're here. But if that feedback loop isn't working, there's no way we're going to optimize public policy. So I would just, end by welcoming all of you to contact me or your member of Congress or your United States Senator and please keep them informed of the valuable things that you learn about and patterns that you are sort of picking up on, where we might act and alleviate some of the pain. And we promise, at least in our office, to give you a measure of the credit once we get it done on behalf of your clients as well.
Well, thank you. And following you is Mark Peterson, and the AICPA advocacy team does just what you're stating. They work with the firms, with our members, and then we've got all the state societies throughout the country. So we do try to get our voice to the policymakers. Thank you for listening.
And they're great, by the way, and they're fantastic. So thank you to AICPA and your state affiliate and the federal affiliate. So appreciate you having me.
Thank you. Have a great day, and look forward to maybe having you back sometime again. Thanks again. Well, that was fantastic. So I hope you all appreciated the extended policymaker and regulatory activity update. I'm going to invite Mark Peterson to join us now. Mark, there you are. So you just had Senator Young. Thank you to you and your team for what you did to arrange Senator Young for today. And also, I know you're in regular dialogue with all of the elected leaders. So I'll let you kind of expand upon what he said.
Yeah, just to actually just highlight a few things that he said, Eric, and that you teed up with him, because I think it's important to remember, as frustrated as we're getting about, the lack of a legislative solution, there are bipartisan efforts. Restart, he mentioned, the deductibility of PPP, the at-home remote working deduction that he mentioned, plus many others. So there's actually more bipartisan agreement than it feels like, because we're looking and we're so eager for this, outcome and the relief. We do have to get through the political season we're in. We're back-to-back conventions in over 2 weeks. They're going to come back in Labor Day and kind of reassess where they are. Everybody will have been back in their district, just like Senator Young, and so they'll have a sense of how their local businesses are doing, and they're going to be hearing from business leaders. And hopefully, again, and you heard this from the senator, I won't repeat his words, but the goal will be to try and push a solution in that time frame. But again, there is the challenge of all of the bipartisan interest in these different elements of relief, marrying that with the larger, broader political discussion over the big issues. And how do we make sure that vehicle moves forward? And then, I've consistently said, I think at some point they get this done. And I also believe that we're going to be looking and discussing other packages to come. And, we'll get into, regardless of how the election turns out, we're going to get into next year. We'll swear in a new Congress. And they're going to be trying to figure out the kind of relief they provide. The one other element, though, Eric, that is kind of in the middle of this, is at the end of September, they've got to fund another year of federal budget. And so there has been some discussion about, because that will be a legislative vehicle, and if that is not passed, the government shuts down, it's a must-pass vehicle. Right now, I don't think the government's going to shut down. I think there's interest on both sides to make sure that happens. Because it's a vehicle, other things could be attached. So I think you're going to hear a lot of discussion about attaching other things to the continuing resolution, or CR is what it's called. But basically, it just bumps the budget along for a certain period of time. There's no consensus on whether that will happen. My experience has been, if it's controversial, it gets narrower, which means what they would call a clean extension. However, it will create an opportunity, and you are hearing some talk from the White House mentioned something yesterday about maybe that's the opportunity to try and address some of these issues. So that will be a point in inflection. I would not be hopeful that there would be major initiatives in it other than continuing to fund the budget. But between now and the election, that's the other big one, Eric.
But the big thing, and I'll say, he said there's going to be more business relief. It's just a question of when, so that we can say that now.
Agreed.
It's just when, it's not if. And so we got to get ready. We got to build the capabilities. So Mark, well, thanks.
You bet.
I agree, Mark, and thanks a lot. And I want to thank Senator Young as well. Great insights, and as Eric said, I don't know about you, but I actually got a sense of comfort from his remarks in terms of the relief. Okay, so this past Monday, SBA issued another interim final rule. This IFR provides additional guidance on the ownership percentage that triggers the applicability of owner compensation rules for forgiveness purposes, as well as limitations on the eligibility of certain non-payroll costs. And Carrie Hipsack is going to walk us through some details in a minute. We wished, as we always do, that there would have been some more answers to more of our questions. Unfortunately, that was not the case. And of course, getting guidance in drips and drabs has not been ideal. And we've had to live with it. But it is, though, why we've been promoting patience, and Eric mentioned that a little bit earlier. I know it's hard, but it's smart while we continue to receive more guidance. And of course, as we know more, we'll make sure you know more. And you've heard earlier that we are very engaged down in Washington and trying to elicit more answers. So with that, I'm going to kick it over to Carrie Hipsack to walk us through what's in the new IFR.
Great. Thank you for the introduction, Sue. I'm always happy to help with the questions that come into the chat, along with April and Brad from the team, but I'm grateful to be here today in a different capacity. As Eric mentioned, I am stepping in for Lisa. So for those of you looking for her familiar face, do not worry, she will be back next week. With that, let's go ahead and jump into the frequently asked questions that we're seeing on the town halls. This slide isn't new, and we like to keep it in the deck simply for a reminder. The FAQ reference numbers you'll see on this slide and the next correlate with the FAQ document that is available in today's session materials and at aicpa.org/SBA. The questions in this chart that are highlighted in the light purple have been updated since last week's town hall. Please be sure to look into those specifically. And if you have any other outstanding questions, the list of FAQs is rather robust and includes much more than the highlight summarized here. On the next slide, we have the top tax questions summarized along with one outstanding question that could impact the forgiveness application process. Senator Young provided great insight into the status of key legislation, and as discussed, there are a few tax questions for which we need additional guidance, including the deductibility of expenses paid with PPP funds, as well as the deduction of expenses while forgiveness has not yet been determined. In regards to the forgiveness application, guidance does indicate that salary and wage reductions, if any, will need to be applied to the full covered period when a borrower applies for forgiveness before the end of the covered period. However, current guidance does not cover how FTE reductions will be addressed if the borrower applies for forgiveness early. As soon as we see guidance in these areas, Eric, Lisa, and myself use Twitter and LinkedIn to quickly share updates. Feel free to follow us on Twitter or connect on LinkedIn. Let's move on to the latest interim final rule that Sue teed up for us. On August 24th, this past Monday, a new IFR was released covering owner compensation and some non-payroll costs, including related party rents. More light was shed on the owner-employee definition for C Corps and S Corps. We now know those with less than a 5% ownership in these types of organizations are eligible for up to $46,154 of payroll costs in a 24-week period. Those with a 5% or more ownership will be subject to the owner-employee compensation maximum of $20,833 in a 24-week covered period. Another component addressed in the IFR is forgiveness limitations for tenants, subtenants, and home-based businesses. The IFR walks through 4 examples. The first essentially says that net rent paid by a borrower is eligible for forgiveness. As the example demonstrates, if a borrower pays $10,000 in monthly rent and has a subtenant paying $3,000, the amount of rent eligible for forgiveness is $7,000. A similar concept is explained in the next example, which outlines that the allocation of eligible mortgage interest will be based on a percent of the fair market value of space that is rented out to tenants. That is, if 25% of the fair market value of the space is leased, the borrower may claim forgiveness for interest on the remaining 75% of the fair market value of the space. A third example covers expenses in a shared space. The expenses must be prorated consistently with the borrower's 2019 tax filing allocations or the anticipated 2020 allocations for new businesses. The final example reviews that eligible expenses for home-based businesses must follow what was deductible on the 2019 tax filing or what is expected to be deductible in 2020, again, if the business is new this year. Finally, guidance on related party rent was included in the IFR. This portion outlined that for related party rent to be eligible for forgiveness, the amount cannot exceed the mortgage interest on the property over the covered period. And similarly to other non-payroll costs, the lease or mortgage had to be in place prior to February 15th, 2020. Also addressed was that the borrower must provide documentation to support the mortgage interest amounts for which forgiveness is being requested, and mortgage interest payments to related parties are not eligible for forgiveness. This last slide about the IFR has sparked some discussion, and we'd like to bring the focus back to the 24-week covered period. With the extended covered period from 8 weeks to 4 weeks, it should be easier for most borrowers to maximize their loan forgiveness. And last but not least, here's a refresher slide on cash and non-cash compensation limits. Not much has changed from last week's slide, except for the addition of the S Corp and C Corp owner-employee definition, which I previously covered in the IFR review. And one last thing I'd like to mention is that all of our PPP resources, not just the FAQs I mentioned earlier, are available at aicpa.org/SBA. We are constantly evaluating the content and are currently working on a case study with the PPP loan forgiveness calculator. Keep checking aicpa.org/SBA for new and updated resources, and we will continue to share resource news with those attending the town halls. And that is all the information I have to share from the team today, and I will hand the floor back to you, Eric.
Well, thanks, Carrie. And it's, the SBA and Treasury are keeping us busy in August with these wonderful IFRs. They came out on a Monday, though. Usually it was a Friday, so we didn't have to work over the weekend. So that's right.
We were thankful for that, Eric.
Thanks to you and Carrie. And one thing that we're doing is you heard Carrie talk about the AICPA forgiveness calculator. I'm going to give a really brief update on the tools that are being developed. We've got this forgiveness tool we've put in place with this fintech partner, Biz to Credit. There are other this slide here, because we always like to highlight the many different things that are happening in the marketplace. ADP, Paychecks, Intuit, Gusto. There are other tools being developed, and we are working on building out this fintech tool for the PPP forgiveness with in mind additional capabilities for the next phases of business relief. We're not going to get into that today, but as we've been saying over the past couple of weeks, we want to advance capabilities. So when this next phase of business relief occurs, one, we need capabilities for the forgiveness process. That's clear, but it's going to happen. This next phase, what is going to happen fast when it happens. We've heard from some of the regulators that when they do finally pass a bill, they may roll it out in 7 days. So we're thinking about that, and we want to have resources and tools ready for you and for your clients. So we've shared this slide previously. This is some of the key PPP tool capabilities that have been put in place, such as managing all of your client applications in with one tool, the ability to preview the 3508 before you submit it to your client for signature, and lots of additional increased flexibility. This is just something that highlights what the finished application package will be. It will include all of the required source documents, as well as a completed 3508 form or 3508EZ form, and it's based on the AICPA forgiveness calculator and we're continually updating it to make sure it's current with the latest guidance. We will be in mid-September. We'll be putting on just a special edition just to review that tool and also talk about other tools that are in the marketplace. Here's just a highlight of the recent town hall series for your reference. Today, we have time, Carrie, for one question. Once again, the reason why we really thought it made sense to bring Senator Young on this week was just because of the uncertainty, and just to kind of, for you then now to be able to go back to your client and talk about all the nuances. Mark Peterson did a great job of summarizing it. So that was the purpose here. And we, at times we're changing how we do the weekly town hall just to bring you the latest information. So hopefully that worked, and you understand the why behind it. So Carrie, go ahead, Mark.
One quick point on that. You're working really hard to bring in business leaders that are relevant for the town halls, and we're working in Washington to also bring in policymakers in order to give those insights. I just want to assure the audience that, I'm sure it's in the Q&A. The profession's bipartisan.
Okay.
The AICPA's operations are bipartisan. We're going to be hearing from speakers from both sides of the aisle. But we do try and look for folks that have been relevant in the negotiations and relevant in a lot of the specific legislative vehicles that we've been interested in. But I just wanted to make that comment because I'm sure I'll hear.
No, but there's questions, and it's hard. We're looking at the questions. We leverage some of those questions for some of the dialogue. Yes, the HEROES Act, and then the timing of the HEALS Act. What we're all about is helping the small businesses, helping the firms, and I think you heard that from Senator Young. And yes, we're in a very politically charged environment. So well said, Mark. And we look forward to having maybe a Democratic senator or someone from the House sometime soon in a future town hall. Maybe we'll have two, but that will just take a little bit more time as well. So Carrie.
Great, thank you, Eric. We have a lot of questions regarding attribution rules for owners, and we know that there is still additional guidance needed in a few areas. We got a few answers, and the 24th interim final rule is what we received on Monday, but we do still need some more guidance. So that's a popular question. Unfortunately, I don't have an answer at the moment, but wanted to let everyone know that we do see the questions, and we're just waiting for more information. Also, Eric, if you could address some of the questions we're getting about the PPP forgiveness tool. There's some questions about integration and having clients, multiple clients. So if you could very quickly touch on the CPA portal, that would be great.
Great. Well, we've got just 2 minutes left, but what I'll say is this is a common question that comes in. The banks are going to have platforms. Absolutely. All the national banks are going to have platforms. We're on weekly calls with the lending community and the payroll community. And what we're looking to do is to have a tool that we think firms can utilize to just look at all of their clients' forgiveness applications, and also be able to support future potential business relief loan applications. And we do understand that it would be great to have these integrate in some way with the lending platforms. I can tell you there's great interest. There's great interest in that zip file, and banks are going to be looking for files from their clients. So more to come on that. It's a work in progress, and as I said, we'll be having a future session on that. So I'm just gonna, Carrie, you did a great job of highlighting probably the most visited page on the AICPA website. Here's the URL for everyone's reference and the key items. We also have a broader coronavirus tax resource center available for you. And we will have our next town hall next week, September 3rd. We love being with you every week. We try to distill the information in the best way possible, give you the latest guidance, and really work with you as you're working with your clients, or if you're in business and industry, giving you some of the information to support your employer. So thanks to Mark, Sue, and Carrie, and hope you all have a a good end to August, and we look forward to seeing you on September 3rd. Thank you very much.